I like the conversation you guys are having. I'm trying to pass my crypto costs down to the YouTube viewers. And look, I got to sell some ads and provide some, value there. I will say the farm is in the green right now, but I have quit selling cryptocurrency. For more info on that, of course, you can check out sonofattech.locals.com. But that is basically what I'm working on. I'd like to figure out how to pay for, of course, the farm and everything and the power without liquidating crypto at this time. Because liquidating crypto doesn't seem like a fun idea, right? That's the idea, at least. I will say Ergo and Neta have put the farm in the green for the past week. So that's been good. If you guys are not doing that yet, check out my how-to on how to do that. Because it's kind of where it's at right now, even with the difficulty being high. Even with the difficulty being high. All right, we almost have all the shares out. Give me 1 second. It's like giving up. I think my straws broke. Sometimes you're putting it in those crappy straws, you kind of bend it and it puts a crack in the side. I did that. I did that today. All right. I think we're about there. We have a pretty good show lined up today, I think. We're just going to take the lid off and we're going to drink this. That's what we're going to do. Hey, how's it going? What's up? What are you doing? Sitting back, relaxing, learning about crypto? So, hello and welcome everybody to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. I go by Blind Rod on the internet and Matthew in real life. Today, we are going to be talking about inflation because clearly inflation is directly related to cryptocurrency, and seeing how it responds is going to be very interesting. We had basically a Jerome Powell address yesterday, and as part of that, we also have crypto regulation that's going to be discussed. We have an opinion piece that I find extremely interesting, which is how financial advisors should think about the crypto crash. We're going to be talking about a new solar-powered Bitcoin miner launching. We have EVGA removing their queue system now that the GPU market has stabilized. We have the 40 series GPU specs updated, the leaks updated. And all of those copper shims you guys been putting on your cards have caused some issues on the memory modules. So WCCF Tech is basically reporting not to purchase crypto mining GPUs. Then we have 3 new miner releases. We have one from XM Rig, one from Team Black Miner, and one from LOL Miner. I will copy out the super chat. I appreciate it, but save the super chats till the end of the show so that we can do that during the Q&A. And let's run the ad. We'll get into the topics. Today's sponsor is Crypto.com. Crypto.com is my go-to centralized exchange for liquidating my crypto assets. With their Crypto.com Visa debit card, I can load up my mined Ethereum to pay for power and other operating costs quickly while earning up to 8% cash back. In addition to the Visa debit card, there are additional fiat options, including wire transfers, to easily receive your profits. Crypto.com also offers additional services, including trading and even staking, to earn additional revenue on your investments. Join 10 million plus users buying and selling 100 plus cryptocurrencies at true cost by using my affiliate link in the description for a $25 funding bonus. Or enter referral code SOAT at sign up for the same bonus. Remember, cryptocurrency investment comes with significant risks, so do your own research. If you're mining Ethereum this week, you should stop. I'm just going to start it off with that. On the 29th, maybe we can go back to Ethereum, but mining Ethereum right now is just going to lose you money. You need to be dipping into other resources, mining different things, playing around, doing testing, refurbing your gear, prepping it up. Shoot, if you only want to mine Ethereum, turn all your rigs off, clean them all up, and get them ready for the 29th. Okay? That's what you should do. Let's get into the first one. Today we have a miner release from LOL Miner version 1.52. It's a re-upload with a small fix regarding TLS. The original version tried to connect with 1.3 and SNI off. The default is now 1.2 with SNI off as in previous versions. So you had 1.5A here and, 1.52. There you go. They re-upload 1.52. Anyways, let's get into it. New memory management for Ergo on Nvidia GPUs. Fixes, excuse me. Fixes the miner not working on current epoch on the latest release and fixes the requirement to restart the miner on Ergo epoch change. Added 2 more epochs for Ergo for 3G AMD GPUs, or the 3GB ones. Note that a better management with automatic switch to zombie mode is planned in the next version. They're starting to get their Ergo updates out. Awesome stuff. They updated the web UI with a lot of fancy redesign. I haven't checked it out. Slight changes to the LHR unlocker to improve the unlocker stability. They removed the 2GB zombie modes for Ergo on AMD cards. And they removed support for mining TON in a single and dual mining modes. Note that existing dual mining configurations will automatically launch ETH, Ethereum Classic, Ubique only modes. So existing configurations will be broken. They fixed multiple issues that caused the miner to not properly reconnect when it took too many attempts. It added an internal Stratum watchdog that will restart the entire Stratum stack internally when not connected for a longer while. Fixed a potential segmentation fault at startup and fixed a segmentation fault when Alphium dual mining is requested, but the dual worker did not get authorized. So there you go. We're getting some updates for Ergo. Obviously, there were some changes to Ergo yesterday with EIP 27. I'm assuming that's where some of this is coming from because it said during the latest epoch change, all that sort of stuff. Maybe they ran into some issues on LOL Miner. I don't think I'm actually using LOL Miner for any of mine. I think I'm using NB Miner across the board. I'll have to go double check. Team Black Miner version 1.64 also released 2 hours ago. They added support for Vertcoin mining, the Vert hash algorithm for AMD and Nvidia, and they fixed issues with Silica mining. So not any particular issues that they mentioned there. Adding Vertcoin mining is probably just good because the more algorithms coming up to the merge that your miner supports, the better off you're going to be post-merge, right? Now, here's a really interesting one. We have a release from XMRig. They don't do a lot of releases. The last one added support for Astrobot, which is Darrow. And here we go. So let's get into it. Ghost Rider algorithm, release notes, VAES optimizations, not supported by XMRig, this version. Random X benchmark, blah, blah, blah. Let's get into this version. So, number 3067, Monero V15 network upgrade support and more housekeeping. They removed deprecated Astrobot V1 and V2 because Darrow mining is on Astrobot V3 now. I was hoping that we were going to see an addition for V3, but I do not see that in this version. So hopefully they're working on that. What this does tell me is that they're aware of the change on Darrow to V3. So hopefully we will have another miner option for Darrow and V3 coming out soon. Fixed debug Ghost Rider build. Monero version 15 network upgrade support. They fixed ZMQ debug log and improved daemon ZMQ mining stability. They have fixes for 32-bit ARM. Fixed being unable to resume from pause on battery. Fixed CPU priority not working sometimes, and removed old Astrobot algorithm. I don't know if that means that they added the new algorithm. Doesn't look like it. I don't see added new algorithm. They just got rid of the old one. Okay. So hopefully we'll see V3 come out soon for XM Rig. So WCCF Tech is saying, beware, several used Nvidia GeForce RTX 30 graphics cards with defective memory modules being sold after being abused in crypto mining. Now, for a while, a lot of people have been trying to convince me of the copper mod stuff. And I've been saying, I don't want to do that because that puts undue pressure on the PCB, which could spell out damage to it later on. Look, if you want to do it and you're getting full mining performance, I'm all for it. I would rather go all in on some sort of liquid immersion or liquid cooling in general before I did that. Primarily because you have a lot of potential for damage to the hardware. Not only do you have to worry about shorting out the hardware while you're doing it, which is why I don't recommend other people do it, but the other issue that you can run into is whenever you put additional weight on that PCB and you're pressuring down on it, unless the specifications are very, very, very good, which is extremely hard to do with that. And I know, like, Cool My GPU, all you guys are doing great work. I'm not like slamming on anybody or anything. It's just you're putting extra weight on that PCB. You can cause some damage to it. Is that where all of this damage is coming from? Let's go ahead and find out what they're referring to. The crypto crashes resulted in several mining operations offloading their graphics cards into the reseller marketplace. But while these GPUs will be available at dirt cheap prices now, some users are already finding various issues, such as the memory modules being defective. Well, this was to be expected. The GPU mining flood is already here, and there are several resale sites that have currently listed the entire range of the 30 series graphics cards well below their MSRPs. So you got 3060 Ti's going for $300 to $350. The Chinese and Asian markets are currently being flooded with such graphics cards, but the very first users who are buying these cards are finding several issues. A user over at nga.cn forums recently paid 3,600 RBM or $536 US for a 3080 GPU. This graphics card is currently listed at Newegg for $1,100 and is a premium model. So paying half the price for a used variant doesn't sound like a bad deal. Even compared to the MSRP of $699, it sounds like a solid deal. However, the reason for such a low price for the graphics card was quickly found by the user. The user noticed that all labels from the screws had been removed, which means that the card had been taken apart at some point. This should be expected as the initial 30 series graphics card had major heating issues and thermal pads had to be replaced manually by users to achieve better memory temperatures on the GDDR6X modules. Since these cards have been used in crypto mining operations, they could have undergone multiple repad placements during their mining lifetime. They most certainly did, right? What's interesting is he didn't actually take the card apart. I'd be curious to know if, yeah, he didn't take the card apart. If you guys want to send it to me, that'd be awesome. I'm curious to know, what the pads are, how good the placement is, and all that. But that isn't the major problem. The user also discovered that in GPU-Z, the RTX 3080 graphics card, which is supposed to have 10 gigabytes of memory, only showed up with 8 gigabytes of VRAM. The 3080 launched in two flavors, a 10 gigabyte model with a 320-bit bus, and a 12 gigabyte model with a 384-bit bus. There was no in-production variant that featured 8 gigabytes of VRAM across the 256-bit bus, and the reason why this card featured a lower memory was discovered to be defective memory modules. Considering just how bad these graphics cards have been abused in mining operations, it looks like at some point 2 of the 10 GDDR6X memory modules gave away and ended up not functioning at all. Now, here's the deal. He didn't take the GPU apart. You could probably, or potentially, right, reflow it maybe, or at worst case, right, or even just replace the thermal pads, get the thermals in check on those memory modules, and they'd come back to life. If they're just shutting down due to heat because they aren't actually being properly cooled, that might be not as big of a problem as they're making it out to be. There is a lack of due diligence here, and I just want to make that clear, but it is kind of funny that you have this shot of the 3080 going over a 256-bit bus and 8 gigabytes of video memory. Pretty funny. Considering how, okay, so let's finish this up. It does result in the card failing to post, but there's already a bypass that allows users to continue using their graphics cards even if a few memory modules have died. This is achieved through the memory shielding method, which is very popular in crypto mining, and miners can continue using the cards despite some modules having died out. A video on this method from Bilibili can be seen below. We are going to save this because I did not know that you could do that, and that is pretty sick. It's in Chinese, but maybe we can figure it out and do an English version. The same process not only works for the RTX 3080 graphics card, but almost any other graphics card. And considering that the 3080 isn't even the most popular card for mining, there could be several used cards in the reseller market right now that might have similar modules and masked to show the full VRAM configuration in GPU-Z, another popular method to trick users. As such, it is advised to stay away from all used graphics cards for now, regardless of how enticing these deals look. And as the user himself puts it, finally, don't buy a mining card, never buy it, and don't buy even if you just need it. There are some caveats here. Obviously, as miners, we are looking for these deals anyways. So, you know, you take a chance anytime you're buying used. Like I said, you could maybe try to reflow the card. You could take a look and make sure that the memory modules are being cooled. If the memory modules are completely failed out, obviously that's a problem. I doubt that it'll be all of them. I'm surprised to learn about this bypass. That's cool to know about. I haven't had any 3080s have memory modules completely die out on me. I haven't even had the 3090s have memory modules completely die out on me yet. So it's kind of interesting to hear that that is a problem. Kind of felt like that might be an issue as we mine on these more and more, especially if you don't get them properly cooled. And it's an interesting thing to learn. So every day we're learning something. Now there are several ways to make the rest of the memory work again by replacing the modules entirely. This has already been done by professionals, but that would mean you have to end up paying for another graphics card with the same memory modules, which defeats the whole point of paying cheap in the first place. So instead of getting into trouble with the used graphics card, just avoid them at all costs. I disagree. I don't think you should avoid them at all costs, and I think that clearly this is a 30 series issue. Probably a 30 series issue with GDDR6X memory modules in particular, because they're the ones that are overheating. So even going down below that, like 3070s with GDDR6 and the non-X, I'm pretty sure are probably going to be okay, right? The 3060 Ti's probably going to be okay. If we go to the Radeon side, the RX 6000 series, probably all going to be okay. This is a single case. It is funny that they take a single case, but then use the term that a whole bunch of people, the users in plural, are finding this, but they only have one particular case to report on. So take it with a grain of salt, in my humble opinion. I'd like to hear what you guys think in the comment section as well as the live chat. So we have new specifications for the 4000 series, and they are updated again. Let's get into them, see what it's looking like. I didn't see too many changes here that I was excited about, but 80102 GPU with 16,384 cores, and the 80103 with 10,240 cores, and the 80104 with 7,168 cores. The specifications of Nvidia's next-gen GeForce RTX 4090, 4080, and 4070 graphics cards have been once again changed in the latest rumor by Copite7Kimmy. He's the one that pretty much leaks all of this stuff. The initial launch lineup is expected to include 3 graphics cards, the 4090, the 4080, and the 4070. The trio of these cards is expected to utilize Ada Lovelace GPUs based on the latest and greatest architecture and fabricated on TSMC's 4nm process node, which is a slightly optimized variant of the 5nm process node. The rumored specs are listed below. The 4090 graphics card is expected to be powered by the top AD102-300 GPU, but is only the TI variant that will feature the full chip. The 4090 will utilize a slightly cut down configuration. The 4090 will use 128 SMs of the 144 SMs for a total of 16,384 CUDA cores. The GPU will come packed with 96 megabytes of L2 cache and a total of 384 ROPs, which is simply insane. Oh, this is the guy that says simply insane a lot. Simply insane. It's simply insane, guys. The clock speeds were not confirmed yet, but considering that TSMC 4nm is being used, we are expecting clocks between 2 and 3 gigahertz range. As for memory speeds, the 4090 is expected to rock 24 gigabytes of GDDR6X capacities, which will be clocked at 21 gigabits per second across a 384-bit bus. From the mining perspective, as we've stated, we already have this in the 3090 Ti, so we aren't going to see some revolutionary increase in Ethereum hash rate or even Ergo hash rate. The algorithms that might benefit from this would be something like potentially Ravencoin or Flux, or of course some of the dual mining ones, potentially Alphium. Alf would be an option. This will provide up to 1 terabytes of bandwidth. This is the same bandwidth as the 3090 Ti, as they state. And the TBP, or the total board power, will be at 450 watts, which means that the TGP may end up lower than that. The card will be powered by a single 16-pin connector that can deliver up to 600 watts of power. It is likely that we may get 500-watt custom designs. It's also important to note, if you guys haven't checked out the Gamers Nexus video on power consumption with the 3000 series, it's pretty bad. I think it's going to get worse with the 4000 series. Now, a lot of people are using this as an excuse across the board to blame even AMD, but I'm not so sure that AMD actually has the same problem, just to be clear. The Nvidia GeForce RTX 4080 is going to be a cut-down AD103-300 GPU configuration with 10,240 cores or 80 SMs enabled for a total of 84 units. The GPU will become packed with 64 megabytes of L2 cache and up to 224 ROPs. As for memory specs, it's going to rock 16 gigabytes of GDDR6X capacity and are said to be adjusted to 18 gigabits per second speed across a 256-bit bus. That's going to provide only 576 gigabytes a second of bandwidth, which means really on the 4080, you're not looking at great speeds. What is that going to be? Cut down in half, 60 to 70 mega hash a second, somewhere in there on Ethereum. Maybe a little bit higher, or obviously a little bit higher on something like Ergo. It is kind of weird that the RTX 4080 will feature lower bandwidth than its 30 series predecessor, but it may be possible that we see a GDDR6X variant as a refresh. For power, the total board power is said to be around 420 watts. The 4080 is looking pretty bad for mining. And then they have the RTX 4070, which is expected to be a cut-down configuration of the 8104 with a slightly higher count than the RTX 3070 Ti of 7,168 cores or 56 SMs. The GPU will come packed with 48 megabytes of L2 cache. As for memory specifications, the 4070 is expected to rock 10 gigabytes of GDDR6 capacities. They're said to be clocked at 18 gigabits per second across a 160-bit bus interface. That is pretty terrible for mining. The card may rock a total board power of 300 watts, and the leaker also mentioned that the pricing of this card would not be lower than the 3070 or the 3070 Ti. We can basically expect a price bump in the 70 class graphics card segment. So what did we learn? With the updated specs, the RTX 4080 and 4070 are looking pretty poor for memory-intensive algorithms as it pertains to mining. We're getting higher power consumptions and lower total bandwidth. The only cards that will have bandwidth comparable to current offerings is going to be the 4090 and the 4090 Ti. But those are just coming in basically exactly at that price or at that point with higher power consumption. So nothing better than what is currently available. I'm kind of disappointed in the the specifications so far on the 4000 series. Let me know what you guys think in the comment section. A little bit more excited for the 7000 series from AMD because at the top end, we are getting a 384-bit bus, albeit with GDDR6, but it's supposed to be the faster GDDR6. We'll just have to wait and see. EVGA has ended its queue system, so if you are scared of used cards and you're wanting to purchase new cards, well, it's going to be a lot easier. EVGA is stopping future GeForce RTX 30 series graphics cards orders from being added to their GPU queue program. This decision comes into light after the decline of cryptocurrency marketplace and the rise in the stock of graphics cards from several manufacturers. However, EVGA is not removing the queue program immediately. They are doing so on a card-by-card basis. The first model to be removed from the program will be the For the Win 3 series, which is readily available to consumers. The For the Win 3 gaming GPU is considered one of the best gaming graphics cards. The GPU will be removed from the queue starting tomorrow on June 23rd. It is anticipated that EVGA will altogether remove its queue order system soon, but will be dependent on physical stock to fulfill the outstanding orders. Last year, the company went to sell available cards to consumers to make up for lost sales due to the GPU demand. That was halted abruptly after EVGA community went into an uproar in response to the company's decision. Within less than 24 hours, EVGA went back to prioritizing its clients in the queue and apologized for their decision. EVGA will contact consumers, notifying them that EVGA will delete the queue order and that their GeForce RTX 30 graphics cards will be available through EVGA's online store. Website Tom's Hardware reports that EVGA contacted them close to 48 hours in advance, explaining that the pending orders for the card on file, which happened to be the For the Win 3 Gaming, were going to be removed from the queue due to the large amount of stock received by the company. While it is still unknown how many and when more GeForce RTX 30 series graphics cards will be removed from the company's queue system, it is anticipated that more graphics cards will become accessible over the next month to the company and consumers alike. At the time of writing, EVGA still sells their graphics cards at somewhat high prices, with no hope of discounts happening through their online store. It is suggested that consumers interested in EVGA or other manufacturers' GPUs should check various retailers such as Amazon, Newegg, and others for lower pricing on the popular 30 series graphics cards. So that is all the hardware news for today. Let's get into more of the cryptocurrency news and see what's going on. Thanks for the 99-cent super sticker, Harvey. All right. Get a little coffee pump going on. New solar-powered Bitcoin miner launches operations despite difficult market. Aspen Creek Digital will host miners from Galaxy Digital at its new data center in western Colorado. Look at that. Beautiful. If only we could be there now. Despite the current bear market for crypto, a new Bitcoin miner has started mining at a 6 megawatt solar powered facility in western Colorado. Aspen Creek Digital Corporation, ACDC, nice, bro, was launched in January of this year, and its mining operation is co-located at a solar farm that has a capacity of 10 megawatts. The goal of the company is to start with mining Bitcoin at its data center and eventually offer computing services to other businesses, according to a statement shared with CoinDesk. The Colorado Data Center will run S19 Bitcoin mining machines and will be co-located with a 75,000 square foot R&D and fulfillment facility. The facility will serve as a centralized testing, maintenance, storage, and training hub for ACDC's future computing infrastructure. The miner is entering the industry at a time when the existing miners are finding it difficult to remain profitable with the decline in crypto prices. Hash rates near all-time highs, a tightening capital market, higher power costs, and supply chain issues. However, ACDC said it was able to raise enough cash ahead of time to secure the required switch gears and transformers for 240 megawatts of capacity, according to CEO Alexander DaCosta. Quote, we wanted to make sure that we had the appropriate infrastructure on hand to build out our first phase. So for our projects now, we actually have more than enough, end quote, she told CoinDesk. Crypto-focused financial services firm Galaxy Digital was impressed enough by the miners' management team and power-first approach that it allocated some of Galaxy's own miners to be hosted at ACDC's Colorado site. The best time to build is a bear market, and people shouldn't be afraid of the market conditions. They just have to make sure they're doing it appropriately and effectively, Amanda Fabiano, head of mining at Galaxy, told CoinDesk. And this is something I've been telling people for a while. This is the opportunity phase. Look, we're usually hitting 500 to 600 concurrent viewers. In the last 2 days, we've been hitting 200 to 300 concurrent viewers. That means people are dipping out. The guys that are here, the few of you that are left over that'll be hanging out through this bear market, this is the time that we find the opportunity. So it's okay. It's okay that everybody's scared. This is good news, okay? Fabiana said that she has seen many miners try to raise money first and then try to find operation sites and power sources. However, ACDC did the opposite by figuring out the power and infrastructure first. Awesome. That's also what I'm working on right now as well. So I'm glad to see that that is the proper direction. She took to the problem of mining and spun it on its head and looked at it from a different perspective, which is really special, Fabiano added. Aside from the Colorado data center, ACDC is also developing Bitcoin mining sites across Texas. Its second facility, which is on track to be operational this summer, is a 30 megawatt data center capable of hosting 10,000 ASIC miners, co-located behind the meter with an 87 megawatt solar farm. And a third project is a 150 megawatt data center, also co-located behind the meter with a 200 megawatt solar farm. Although the miners' operations will be powered by solar energy, they will still be connected to the grid to have the option to provide power back to the grid. Oh my God. What are miners doing? Miners are clearly contributing to more sustainable energy and stabilizing the grid. What have they done here? They're behind the meter, but they have a 200 megawatt solar farm on a 150 megawatt data center that's behind the meter. What does that allow them to do? That allows them to provide all of that energy from that solar farm to the power grid and have ERCOT essentially pay them when they turn off because they're supplying that amount of energy back. This is absolutely brilliant and would be like my dream setup for sure, right? Although the miners' operations will be powered by solar energy, they will still be connected. Yeah, we read that. When asked about the Electric Reliability Council of Texas' latest requirement for the new large-scale miners to seek permission before connecting to the grid, DaCosta said her company had already successfully completed the procedural requirements for its second site and is doing the appropriate work for the third site. ACDC said it will be able to figure out the power sources with the help of its partners who have experience in building renewable energy power infrastructure. The renewable power developers are also part of the miners' founding group and equity investors in the company. The move to use solar as a power source comes as more miners are looking to use renewable sources of energy for their operations as lawmakers around the world scrutinize miners' energy consumption. And quite falsely, check out my video from yesterday for more on that. Most recently, Adam Back's Blockstream and Jack Dorsey's Block said they are building a pilot crypto mine in Texas that will be powered by a Tesla solar installation and batteries. Oh, of course Elon and Dorsey are just hopping in together. Elon's like, bro, I got some solar. And Jack's like, cool, man. I got some Bitcoin miners, dude. And he's like, all right, let's do it. And they're like, all right, man, it is a little depressing as a small crypto miner to try to compete with these guys that are able to just generate these types of sources, income sources. But it is also awesome to see it coming together to basically, it's just a statement in the, like, we keep seeing this in the news cycle, right? We get the FUD that surrounds it, and then the fact, right? And the FUD in this case is essentially like cryptocurrency mining uses a ton of electricity is bad for the environment, when the fact is we are seeing Bitcoin miners spin up basically completely renewable solar farms and providing that energy to the grid, thereby reducing the dependence on, of course, dirty energy. So the fact is completely separate from the argument against it. And you should pay attention to that, because that's happening a lot more in our world right now. Fed Chair Powell says soft landing will be challenging, calls for crypto regulation. Here we get to the main topic of the day. Fed Chair Powell says soft landing will be challenging, calls for crypto regulation. The chair of the U.S. Central Bank was challenged by senators on Wednesday on issues including inflation and crypto regulation. Federal Reserve Chair Jerome Powell told Congress that the U.S. Central Bank must go ahead and keep raising interest rates to get inflation down, even if that means the economy faces higher unemployment and a potential for recession. Look, we run on debt. That is what's happening here. They're running on debt. And that's the only way that they can basically stay alive. And by they, I mean the nation state, I mean banks. That is what's going on here. And it's important to realize that everything that everybody's been telling you about inflation not being a thing, a recession not coming, that sort of thing. Once again, like we just stated with the Bitcoin mining thing, the FUD versus fact, except I guess you could say that the fact here is a little bit more fuddy in this particular case. They want to make you think that there's no such thing as inflation or recession coming so they can keep pumping money into the machine. And that is exactly what we see, right? Everything that they tell us about a recession not coming, inflation not coming, it's clear to me, and maybe I'm incorrect, and you can let me know in the comment section, that a potential recession is coming, probably a recession, and that interest rates are going to go high and inflation is going to be out of control, and we are going to be paying $10 a gallon for gas. That's what it looks like to me. During a hearing before the Senate Banking Committee on Wednesday, Powell said that the soft landing is going to be very challenging and that a recession is certainly a possibility. I think it's pretty much going to be confirmed at this point. John Kennedy called Powell the most powerful man in the world right now. We are not trying to provoke and do not think we will need to provoke a recession, but we do think it's absolutely essential that we restore price stability, really for the benefit of the labor market as much as anything else, he said. Inflation is still running at a 4-decade high of 8.6% in May, a new high that surprised economists, traders, and even Fed officials. Powell said that the Fed will continue to raise interest rates until it sees a clear sign that inflation is cooling down. Financial conditions have already priced in additional rate increases, but we need to go ahead and have them, he said. The federal funds rate is currently in a range between 1.5 and 1.75%, but revised projections by Fed officials last week showed that the rate is expected to go up to 3.25 to 3.5%. It's 2 points. 3 senators, including Cynthia Lummis, Kristen Sinema, and Sherrod Brown, challenged Powell with questions on crypto, specifically regulation, accounting treatment of digital assets, and the current crash in the crypto market. We are tracking those events very carefully, said Powell, but the central bank is not really seeing significant macroeconomic implications so far. He also repeatedly highlighted that there's need for better regulatory framework for crypto. The same activity should have the same regulation no matter where it appears. And that isn't the case right now because a lot of the digital finance products in some ways are quite similar to products that have existed in the banking system or the capital markets, but they're just not regulated in the same way, he said. So we need to do that. Like I've said before, you can call a spade, just don't come take my spade away, and we're all good. As far as regulations of digital assets, we've talked about this before. Like, it's going to be near impossible for anybody to regulate this at the end of the day. As far as cryptocurrency as a whole, you can regulate it once it hits the point of participating in traditional economies, right? You can do it once it hits the banks, etc. Once it hits the fiat systems. But even then, it's pretty complicated with, products like the centralized exchanges like crypto.com and Coinbase, etc. You're going to have your KYC, you're going to be able to track taxes and so on. But to be able to track and regulate the entire industry of cryptocurrency will be near impossible, at least in my humble opinion. And then you'll see a dissolution of the nation states and smaller economies kind of pop out. I think you'll just have parallel side economies, side chains essentially going on within cryptocurrency. And they'll make their own rules. They won't be adhere to the rules necessarily of traditional finance. And I think that is something that will come maybe in 10 years, maybe in 50 years, but I think that is coming down the pipeline. And I get a lot of that from, of course, the book, The Sovereign Individual. So let's talk about how financial advisors should think about the crypto crash as an opinion piece on CoinDesk. I am not a financial advisor, nor is this financial advice, but they're going to tell us what they think financial advisors should be doing. Billions of dollars have just been erased from the crypto market, but that shouldn't spook financial advisors. The last several months, and especially the last couple weeks, have been unkind to crypto markets. The downturn in prices and the torpedoing of the store of value and non-correlated asset theories about crypto have turned many in the public square against digital assets as both an investment and a new financial system. Financial advisors who were thinking about adding crypto to their practices several months ago are likely to or taking a second look, and rightfully so. Downturns aren't fun, but often they're also opportunities. Contrary to conventional wisdom, could this be a good time for financial advisors to learn about and potentially implement digital assets into their practices? Let's discuss. So obviously, like I've been saying for a while, this is the time of opportunity. And to miss this opportunity, I'll just go ahead and see you guys again in the next bull run after I've already purchased all my equipment once again. And you're asking me, what is a good price for an RTX 3090 Ti? And I'm like, I was buying them for $300 a pop before the bull run. So I don't know what a good price is now, just like I did with the 5700 XTs. But it's like, it's hard because we preach this stuff even through the bull run, and the same thing happens every single time, right? We always end up in a position where interest goes down. Very few people capitalize on the opportunity, and then everybody wants to try to capitalize on it when prices are sky high. Downturns aren't fun, and we went over that. So what happened? Without going back too far in the annals, I'm going with it, of crypto lore, we can look to November of 2021. With the world opening back up following the COVID-19 pandemic, we're going to call it the lockdowns. And the realization that we now have trillions more dollars in circulation, not to mention supply chain and production issues, tech stocks started finally falling in value. Bitcoin and crypto also started falling from their all-time highs. At the time, this was just seen as a healthy overall, even with a 40% plus drawdown in Bitcoin price. And that is a very valid point. Like we talked about this before. What is the difference between what is happening, what they're telling us is happening, right? Back then they were telling us there's no such thing as inflation. There won't be hyperinflation. We're not worried about interest rates going higher. We'll maybe have to do a 50 point, and then it went to a 75 point. And what is happening in reality compared to what they're telling us is what we need to be paying attention to, because that's going to give us an idea of where we're actually headed and what directions this is all going in, right? Then in May, Terra happened. The $40 billion layer one or base layer network lost almost all its value in a few days, pushing the price of Bitcoin down through forced selling in an effort to remain solvent. This drastic fall highlighted some negatives related to crypto, specifically the centralization, poor incentive mechanisms, and adherence to a propped up yield as a tool. And we've been talking about that, of course, with things like Celsius and BlockFi, etc. While the prices leveled out, the overall economy kept looking worse. With 40-year highs in inflation, more supply chain issues, and record energy prices, talk of a coming recession began, which has brought a flight to liquidity and safety from all risk assets. The NASDAQ and the S&P 500 and crypto all fell. The multiple steep drops in Bitcoin and ETH led to the liquidation or near collapse of several hedge funds and lending platforms such as Celsius and Three Arrows Capital. More forced selling, more falling prices. Bitcoin fell below $20,000 and ETH below $1,000. For the last couple of years, we thought we would never see these levels again, but here we are. I thought we would always see these levels again. Now, mine was always 21,000 and 1,100, which, we're pretty close to that. What is it today? 20,400 on Bitcoin and Ethereum at 1,094. I mean, pretty sure we're going to sit right around here for a while. We're going to have dips down. We're going to come back up to it. Dips down, come back up to it, because we're having these traditional financial markets manipulating it. And I think we will see a little bit of another dip here coming up when some of these more futures expire, stuff like that, right? Which I think is coming here soon. I think on the 29th, we're going to see another dip, something like that, if I recall from what I was reading. As an advisor, you should choose to just ignore crypto for a few years or altogether. Based on recent events, price action, and narratives, I wouldn't blame you. You have plenty of possible investment options for your clients. If, on the other hand, you're still determining which direction to take, here are some points for consideration. While the prices of crypto assets are way down, the networks and protocols underlying those assets are still being used. A recent report from the Fed shows that possibly 40 million Americans are using cryptocurrency in some form. Up to 6 million of those people are using it for payments in some sort. And 60% of them have income below $50,000. That's an interesting statistic. So that income below $50,000 and 60% of them having it does mean we are moving into, this is talking about the US in particular, and we're starting to experience hyperinflation and some issues surrounding it, or inflation, I should say, and a possible recession and possible hyperinflation. And if you read up on the situation in Venezuela, it's very interesting to note that these are the same asset classes, or the same, economic class that started in, purchasing Digibyte for transactions, etc. And that's 60% of the US population. It does point to that to me, right? I'm not saying it's going to be like a complete collapse like Venezuela, because the US does control basically the money supply. I'm just saying it's very, very eerily similar to the same situation, where I'm not saying like 50,000 is like lower class, but if it's a family of four, 50,000 is definitely lower class, right? You're talking about, below the poverty line for a family of four, especially as inflation starts hitting right now. That's pretty low income. And if 60% of these people are utilizing it for payments already, this is very parallel to what happened in Venezuela last bull run, right? The very people who need a new financial system are using it as intended. And the use of the networks will eventually drive the infrastructure adoption and value of the assets. Also, the most recent price downturn due to liquidation happened in a very traditional finance way. Centralized entities were using leverage with crypto as collateral. For the most part, they were not utilizing the decentralized financial system. The decentralized financial system protocols built for lending and trading have held up just fine so far, even with the extreme volatility and liquidations. You know why? Because obviously we saw an example with ST, ETH, and ETH, where when it gets to the point to where the asset has less value, DeFi is going to correct itself. It's going to say, no, there's not enough over here for you to swap into, right? Everybody wants ETH. Nobody wants ST, ETH. We're not going to let you keep swapping it over because, well, the people aren't adding in that pairing anymore. While in the up-only speculative mode, most people just pour money into tokens and protocols that produce the highest return or have a chance at an outsized return. There is maximum FOMO, or fear of missing out, at this stage. And we seldom look at the risks investors are taking to achieve those returns other than the volatility of the assets. When we're in a situation like we've seen in the past several months, we start to better understand the risks of interconnected system, leverage, lack of transparency, etc. We have seen the poor incentive system, which could be gamed in Terra, and the hypothecation, and leverage of Celsius and Three Arrows Capital. As an industry, we are increasingly understanding the risks inherent in the system and how we can identify them before they negatively affect us and our clients. What are the risks of holding digital assets on an exchange or even lending them to a centralized company? And is the return you receive enough to compensate for the risk? And this is something that I was bringing up on Twitter. I think the other day, somebody was saying, should I be holding it, in something like BlockFi, Celsius? I want the return. And I was like, if you're holding it over there, it's a centralized service and you may be getting return or numbers on a page, but it doesn't mean anything if you can't pull it out. Basically, you just gave them all your money and you lose it all. You gave them all your crypto and you don't have any of it. You're much better off controlling your keys. If you want to get into earning some interest or something on your cryptocurrency, make sure you're utilizing a true DeFi system, something like Uniswap or Ergo Dex if you're participating in Ergo. Yes, your returns aren't going to be as high, but you're going to control those keys. Take the safer option and control your keys. If it's a large financial investment, just don't even touch DeFi at all either, because that's going to require you to have a hot wallet. And you don't want to have a hot wallet if it's a significant amount of your net worth, right? We are getting better at comprehending the values of transparency as well, as we can predict the level at which major liquidations will happen and even identify the parties that can be liquidated. The increased understanding of transparency and value flows is also contributing to the better potential analysis of the value of certain protocols and their requisite tokens. Even before the downturn, the growth in value and popularity of crypto had pushed U.S. regulators and legislators to talk about increased regulation. The recent events have given them more to talk about. Cynthia Lummis and Kirsten Gillibrand introduced a bipartisan bill to Congress, and stop calling it a bipartisan bill. We've read both sides of that story. That's not true. It is not bipartisan. I just want to make that extremely clear. It's not, right? We've read both sides of the anti-crypto and the pro-crypto letters. It's been clear that this is a partisan issue. And it followed the executive order from the Biden administration, which gave various agencies marching orders with regard to regulating crypto assets. We will likely see more guidance and regulation in the coming 12 months, particularly to protect investors and partially to protect the dollar. This will make advisors, wealth managers, institutions, and investors feel a bit safer for allocating crypto. I want to bring that up. It's not partially. It's fully to protect the dollar. It is 100% to protect the dollar. That is the primary goal. Whenever there is FUD, like whenever they're like, oh, it's to protect the investor, throw that out the door. It's not like 50% we're worried about protecting the investor. It's 0% we want to protect the investor, and 100% we want to protect the US dollar and our control over the monetary system. That is 100% what it is when it comes to regulation, okay? The growth in value and notoriety of the crypto industry in the past few years created tremendous growth in the infrastructure, while building a wall of cash and venture capital funds waiting to be deployed into decentralized finance ecosystem. As an advisor, this is a great opportunity for you. The decentralized financial tools of crypto will continue to be used and grow. More money will be poured into the applications, driving even more adoption. Your clients and prospective clients will need you to be the expert to help keep their money safe, have intelligent conversations around risk and reward, and educate them on the value of these assets and protocols. They will need help from someone versed in finance to explain why the potential to earn 20% is still bad if the risk is too much. They will need help from an expert to determine how and where to custody their assets. They will need help understanding how they can earn yield using the DeFi system and do so in a safe manner. In the early 2000s, tech stocks experienced a severe crash, but the years after turned out to be the best time for investing early in the technology. This might be the equivalent moment in crypto, which makes the next few years the best time to start helping clients with their crypto allocation. It's really about a lot more than that too, because what we are seeing is the final step in the digital transformation. We will see a digital dark age, and this is a lot less, in my humble opinion, about making money off of crypto and a lot more about being prepared for the future of how our economies and societies will function and participate together. And that will be heavily influenced by blockchain and cryptocurrency. And you can do yourself a great disservice by not learning about it, right? All right, so let's talk about my mining profitability for the past 24 hours, right after a word from today's sponsor. Today's sponsor is Crypto.com. Crypto.com is my go-to centralized exchange for liquidating my crypto assets. With their Crypto.com Visa debit card, I can load up my mined Ethereum to pay for power and other operating costs quickly while earning up to 8% cash back. In addition to the Visa debit card, there are additional fiat options, including wire transfers, to easily receive your profits. Crypto.com also offers additional services, including trading and even staking, to earn additional revenue on your investments. Join 10 million plus users buying and selling 100 plus cryptocurrencies at true cost by using my affiliate link in the description for a $25 funding bonus. Or enter referral code SOAT at sign up for the same bonus. Remember, cryptocurrency investment comes with significant risks, so do your own research. I'd like to encourage you all to hit that like button for me. We have about 350 viewers and 112 likes. I like to get at least 50% of those as likes if possible. And if you have any, disagreement or anything like that, I always like to hear it out. We'll get to that in the questions and answers portion. Mining profitability on the farm for the past 24 hours has not been too shabby. We're at 13,163 netta paid out, with 2,957 netta waiting to be paid out. So if we calculate that out, let's go ahead and get it. This changed, by the way, so I have to redo it. 163 plus the 2,957. We're at 16,120 netta for the day so far. If we calculate that out on the DEX, it'd be 16,120. We're at $101.29 right now for the past 24 hours. Now, this is because payments are catching up. For the past 24 hours prior to that, we were at $165. So, in the past couple days, we've done almost $300 in mining revenue. There is a guide on the channel if you want to check it out. I keep reading in a ton of posts everywhere. I'm not maintaining profitability. I'm turning off rigs. ETH is trash. We can't do it. I get it. ETH profitability is terrible. Look at the block times. 16 seconds. There's not enough blocks being solved in enough time for you to be profitable on Ethereum. I don't care what you do, but I'll tell you this. Checking what to mine ain't going to help you anymore. None of what I'm doing is on what to mine. All right. So unless you're going to sit down and do the work, I don't need to hear the complaints. Turn off your rigs and sell them. If you're here to get the work done, then that's what this is about. Mining is work. It's doing research. It's figuring out how to make your farm profitable. That is the end of the story. Reduce your power consumption. Increase your profitability, increase your revenue. Figure out what's going to increase your revenue. Get to work. If you're having a big struggle right now, I understand it. It's rough. Some places, obviously, if your power cost is too high, it's done. You're not going to be able to do it. I get it. And it sucks. It'll come back. It's cyclical. We talk about this all the time. You may want to prep. Now's not really the time to do a couple things, right? We're at the bottom now, or close to the bottom. We could go lower. Yes, that's a potential. But making bad decisions and following the lemmings off the cliff is not what you really want to do. So what are the lemmings doing? Liquidating their cards, right? What are they doing? Putting in shorts on cryptocurrency. Probably don't want to do that, right? These are things you should pay attention to. Go against the grain. The opportunity is here. Figure out how to be profitable. Put the work in. I'll be doing my best to help you guys put the work in. I'm putting in a ton of work over here. And I'm trying to share that with you guys. But there is only so much I can do. Speaking of going to What to Mine, we go to What to Mine every day and check it. But this isn't your end all be all in mining cryptocurrency. This isn't going to get you there. All you can do is come in here and go, okay, well, Ethereum's down to $1.59 a day in revenue and on a 3090 and 83 cents a day in profit after 10 cents a kilowatt hour. Okay, cool. Are there other options out there, right? If we scroll down and look at Ergo, well, Ergo looks pretty bad, right? 49 cents a day in revenue, $1.11 a day in revenue, 49 cents a day after power. Seems pretty bad, but that's clearly not true. Not if we're putting the work in. It's not true. Okay? Cero, $1.71 a day in revenue, 92 cents a day after power. Ravencoin, $1.71 a day in revenue, 91 cents a day after power. Conflux, $1.59 a day in revenue, 80 cents a day after power. Firo, $1.42 a day in revenue, 68 cents a day after power. Ethereum Classic, $1.34 a day in revenue, 57 cents a day after power. Flux, $1.26 a day in revenue, and 56 cents a day after power. If we even get to I think it's 15 cents, or was it 16 cents? Maybe it was 16. I forget how high we have to go here. Okay. So even at 16 cents, you're still in profit. What's going to put us above that? 20, I know, what is it? 27 cents in California. And that's where you go negative. So obviously, if you're mining in California, what are some options there? Get an LLC, get business, power from a company. Don't be mining on your residential power. That's probably going to keep continuing to go up. Try to get locked in rates wherever you're going. These are some ideas. Let's take a look at the hash rate on Bitcoin. We are at 218 exahash a second, down 4 exahash a second from yesterday. Let's take a look at Ethereum. Ethereum is down to 939 terahash a second, and the difficulty has spiked back up almost to where it was at back when we had the all-time highs on hash rate due to the difficulty bomb. This is going to reset on the 29th, okay? You're going to have till September, and with the hash rate going down on Ethereum on the 29th, when the Glacier upgrade goes in for Ethereum, you could probably be pretty profitable off of Ethereum for a while. We'll obviously be covering that here on the channel, and that profitability on Ethereum is going to go back up, and probably more than it was, say, in pretty much the whole month of June, probably even all the way back to April and May. It should be April to May profitability, but maybe even a little bit higher, because I'm not sure this hash rate that's gone off of Ethereum is gonna come back on, right? Because why do I say that? Well, we're seeing the Chinese miners liquidate all their GPUs, okay? So this is good news, right? What are you seeing? A large portion of miners taking all their equipment and selling it off right now, which is absolutely baffling, because in just a few days, right? I was trying to look at the date. I can't read it from here because this light basically burns a circle into my eyes. We are going to be seeing profitability back to April, or revenue back to April and May timelines, but with less hash rate on the network. But this is great news, because they've already turned it off. They have them pulled out of the rigs. They're lying on the floor. They're getting liquidated. So congratulations. You're at least going to get a couple months here of extra revenue potential. Ethereum Classic, 24 terahash a second. Flux, 1.34 mega solutions a second. No real changes. Ravencoin, 2.51 terahash a second. And my favorite, Ergo, 14.25 terahash a second. We've had a nice decrease in that. And look at this. The difficulty is back on its way down. So we'll be seeing some up rewards on Ergo here for the next few days, which should perfectly coincide with the 29th Glacier upgrade that we can then hop off on over to. So this is looking great. This month's going to be, barely green, but we're going to be in the green, and I'm pretty excited for that. Alrighty, so mining pool profitability for the past, past 90 days. Ether mine in first, crazy pool in second, F2 pool in third. Last 60 days, Ether mine in first, crazy pool in second, F2 pool in third. Last 30 days, ZET in first, Ether mine in second, crazy pool in third. Last 21 days, ZET in first, crazy pool in second, Ether mine in third. Last 14 days, ZET in first, crazy pool in second, Ether mine in third. Last 7 days, ZET in first, crazy pool in second, Ether mine in third. Last 3 days, crazy pool in first, mining pool hub in second, crux pool in third. And for the last day, crazy pool in first, mining pool hub in second, and F2 pool in third. Taking a look at ASIC miner profitability, let's get into it. Popping on in and taking a look at the KD6, it's fallen to $19.98, which is actually below the L7, which is now taking the lead on ASIC miners at $21.18 a day. Pretty cool. The KD5 down to $12.59 a day. So the Antminer L7 basically is taking the lead now. That's the big change that we need to take to heart here today. And then the S19 Pro is down to $3.41 a day. However, remember, we have it up to 138 terahash a second potential with the new firmware from Hivon. And as we checked yesterday, that brings it up closer to the $5 a day. So you want to keep that in mind. That's an extra $2 a day on every single S series ASIC miner. It's pretty incredible that we saw the hash rate go down on Bitcoin today. I was expecting people to start getting this deployed out. It might take a week or two, though, for them to get all of their miners flashed over. I'm wondering if we'll see a little bump in, of course, hash rate on Bitcoin over the next week. So average block times, like we said on Ethereum right now, 16.25. They were only really supposed to be at 15 seconds by now, and they are already over that. So it's been accelerated quick. The devs on Ethereum did not time this out properly, hence why we're getting a delay with the Glacier upgrade on the 29th, or somewhere between the 27th and the 29th, depending on when we hit that block, okay? Let's get into questions and answers. Remember, super chats are never required, always appreciated, first to be answered because they're the easiest to read. All right. And, sorry, I was getting that fixed. Tagging @SonOfATech will highlight the message orange and make it easier for me to read if you don't want to donate. If you do not tag @SonOfATech, there is no guarantee that I will even see it, much less read it. I do have one super chat that I wanted to answer the question for, and it said, do you see them incentivizing miners at the end of proof of work to keep the network secure when difficulty is super high and things are unprofitable? That's what they're doing with the Glacier upgrade. That's essentially what the Glacier upgrade is. It's going to bring ETH profitability back up to almost double of what it is right now, right? So you're going to be talking about $2 a day on a 3090 back up to around there. That's, of course, very rough estimate and my prediction, but that's what we're looking at. So I think on the 29th, that is what you will see as far as Ethereum is concerned. We had some super chat stickers from Harvey. Thank you. We had a super chat sticker from Jason Gilbert. Thank you. That helps boost the algorithm, so I appreciate it immensely. DeWolf Mining says, @SonOfATech, yesterday I tried Netta, the same as your tutorial. You only mine 559 Netta, or 599 Netta in 12 hours on a 2.6 gigahash farm. Do they only pay out higher to loyal miners based on length of time like ETH? So yes, pools will still, you're going to need to be on there usually somewhere between like 6 and 8 hours, but it depends on the payout system. I believe they're PPLNS. The longer you're on, the better it's going to be. You also have to keep in mind that they are still behind on processing the blocks. So once that gets caught up, that's going to change it a little bit too. Gabe says, @SonOfATech, do you know why Ethermine always is really high on the profits list, even though their luck is almost always over 100%? Nope, I do not. Other than I can tell you that it's because of the amount of hash rate, right? So they find the most blocks. So being over 100% when you're finding the most blocks is still like, or being over 100% when you have the most hash rate on the network is still, you're still finding the most amount of blocks, right? Because you have the most hash rate on the network. That'd be my best explanation. Daniel Ring says, Ask Tech, is Digibyte lower power heavy than Bitcoin? The calculators seem to suggest so. In my experience, yes. And that was only, I have very limited ASIC experience, but yes, it was. I don't know the reasoning for that, right? But I do know that it was. And that's all I can really say at this time, because it's the same algorithm, right? So in theory, no, it's not. That could be because of the way the block times are set, etc., right? I'm not really exactly sure. Harvey says, Ask Tech an idea about buying strategy. Just like when GPUs in a bear market, you should also buy solar tech when energy prices are low and they are unpopular, which I think right now we're in the opposite range of that, right, Harvey? But you bring up a good point. That's why the plan, right? That's why the plan to build out infrastructure during the bull run when solar was unpopular is working out for this company, right? Aspen Creek Digital, because they approached it from, we're going to invest in a whole bunch of solar before, right? Before the bear market. But you're correct. Black Cat Crypto says, Ask Tech, why is lower luck better? Luck is, okay. So when they're calculating luck, all it is a calculation of basically how long you've been mining versus when you should have found a block. So if you're at 100% luck, it means that you should have found a block already by now. If you find a block at 50% luck, it means that you found a block in half the amount of time than was expected. Alex Dewitt says, Ask Tech, you're going to do solar? Not right now, no. Crypto in Tech says, Ask Tech, will GPU prices go up when the bomb is diffused? Probably not. Like I said, the thing that is happening right now is all those Chinese miners are ditching all their graphics cards. Their new graphics cards, their 30 series graphics cards, they're getting rid of them. They've already turned them off. We see it on the network getting turned off right now. This is good news for you, right? For people that still have GPUs, this is good news. But I do not think that the prices of GPUs are going to go back up basically on a reset of the bomb. There may be like some people that like get confused and think that that's going to be delayed even further and be like, oh, okay, I'll buy it. But most people are just expecting this to be the last difficulty bomb delay. Most miners are expecting it to be the last one. So I think they'll sell it, say, whoopsies, I could have earned some more revenue for the next 2 months. But oh well, whatever. I'm not going to go invest in it again, right? Dan Watt with the $2 super chat. Thank you, good sir. Says, Ask Son of a Tech, use Locals link to schedule one-on-one. Yep, it's sonofatech.locals.com. And then at the beginning of the week, I post a Calendly link and you can schedule up a one-on-one with me. It is a membership program over there, though, to be clear, to help support the channel and get through the bear market and help with mining farm costs. Yeah, Harvey says, exactly. You have to go against the grain. Solar investments are very expensive and popular right now. And that's kind of, that goes to the point that we were talking about earlier. We are used to seeing, 500 to 600 concurrent viewers at all times on this channel whenever we do this morning show. And we are clearly seeing people dip off. This does spell out good news for everybody that is here, because it means that you are in the opportunity phase. And all those people will come back, like I said, when we've been buying RTX 3090 Ti's for $300 a pop on the used market, and we're ready for the next bull run or whatever those are, right? The ASICs, whatever it may be. And they're like, oh, now I want to hop in. And then they'll hop in, they'll get depressed because it'll go back down again. And they get trapped in this cycle of always following the lemmings off the cliff. And it's like, there's no help for people that are going to keep doing that, right? So hopefully we get enough of the message out that people realize that that's what's happening, right? Because this is cyclical. We've seen it before. It's extremely frustrating how obvious it is, right? It's extremely frustrating how obvious it is and how many people don't see it. Birthing says, Ask Son of a Tech, I'm turning my farm solar, waiting for everything to come in. Super excited. Congratulations, sir. Harvey says, Ask Son of a Tech, would it make sense to upgrade your power supplies to 96 platinums? PSU prices are worth following in a bear market and cost-cutting measure. Also good long-term investments. So you bring up a good point. Now, in my particular case, I'll be getting all platinum rated server power supplies here soon. So we'll be talking about that. But to be clear, we are like, there's this weird thing. We're having an industry shift to ATX 3.0. And I don't know how that's going to affect it from the power supply market point of view, because if there does end up being a good GPU to mine on in the 4000 series, you're going to need ATX 3.0. So investing in power supplies right now, when we're not really sure what the next tech is going to be, is a little hard. But the good news is the 4000 series should be launching during the bear market, meaning that it'll be easy to get the cards to test for the channel. It'll be easy to test it with traditional power supplies versus, of course, the new ATX 3.0 standard power supplies, and get an idea of what that would look like from an infrastructure standpoint, if it's worth it, right? Because what I'm assuming is going to be worth it is 4000 series comes out, everybody dishes their 3090 Ti, you start picking up all the 3090 Ti's, primarily because they have all the memory modules on the front of the PCB, making them easier to cool, which is obviously what you want to see. Plus, they still maintain the hash rate that the 4090 and 4090 Ti will be getting, and you get those slotted in for a cheaper price, and you remain on legacy power supplies, so you aren't upgrading your infrastructure from that standpoint. So then you would want to obviously upgrade everything to platinum rated. You want to upgrade everything to 200 to 240 volt, just depending on, like, if you can get to three phase over single phase. All those kind of upgrades are what you're looking at doing. Mayan says, at Son of a Tech, Raven Firo mining for target of 25 cents is logical. I'm not clear on the question. Potassium says, at Son of a Tech, any good places to get mining motherboards? eBay prices are horrible. Here's the thing I will talk about that I think a lot of people miss. Because I got this question before. Will mining motherboards become cheaper during the bear market? And yes and no. What happens in the bear market with motherboards in particular is that the motherboards end up being discontinued. So you end up at an inflated price, even on secondary markets on like eBay and so on. So your best bet for getting motherboards for mining is like basically scrounging Facebook Marketplace for people that have just completely liquidated. Because there's this thing that happens, right? There's this thing that happens where you essentially, and this is where I got all of my mining motherboards, pretty much. Well, actually, other than the ones that have been sent for review, which has only been like 2, right? Other than the ones that have been sent for review, all of the motherboards I got for all of my rigs, I got in one single purchase off of a guy that was liquidating all of his motherboards and power supplies. I got I got 10 motherboards. I got like 20 power supplies. I got 100 risers, all of that equipment off of one guy off of Facebook Marketplace that was just in, get mode. I'm getting out during the last bear run. And I got all of that for under $500, right? So those are the kind of deals that you're going to be looking for during the bear market. The guy that is just like, I'm done with this, and like frustrated, just wants to get rid of all the equipment, get it out of his garage and be done with it. That's what you're looking for. From the manufacturing standpoint and MSRP, those are not going to come down on mining motherboards because, like I said, they discontinue all those lines. Every time that this has happened, they just stop making them, right? Rosewill just stops making the server cases they were making for it. ASRock just stops manufacturing the H110 Pro BTC. Like, all these companies just stop manufacturing it, and then the next bull run, they'll start manufacturing one. it puts you in a very weird space because you're always like a couple generations behind on the motherboards, right? Like the ones you're going to be picking up now are going to be like the TB360s or whatever, but not the 500s. And then the cycle will happen all over again. So that's like the best bet that I can tell you as far as all that goes. There may be some deals here and there that get fully liquidated on eBay, so you can keep an eye on that. But your retail, like I said, they're going to stop manufacturing them. There'll be inflated prices on motherboards. It's just going to stay that way. Golden Goose says, ask Tech, there wouldn't be this great opportunity if everyone followed the cycle correctly. You got in solar in the bull run and now looking to expand. Congratulations. Good. Or Golden Goose. Not good. There we go. Thanks for the other super chat sticker, Harvey. Let's see. That's going to wrap it up. I'm going to get to jiu-jitsu. So I want to thank everybody for hanging out today. Hit the like, comment, subscribe, and notification bell down below. We all going to make it. If you're here right now, we're all going to make it. I believe it. We're just going to get it figured out. Don't get too attached to one coin. Definitely don't get attached to what to mine. Bob, weave, figure it out. On the 29th, we should get a couple months of reprieve, which will be nice. I'll see you next Tuesday.